Hey man, how's it going?
Hey,
Hey, how you doing, guys?
Good.
doing great.
We're just laughing. He's got a bit of a puppy, and yesterday was his first dove hunt, and so the fiasco that ensued, if you can imagine.
How old is the puppy?
He was running away and all that. So it was
They
fun.
chased me. I'm like, no, you're a retriever.
Right. It was good.
Well, Chris,
How old,
nice to
how
meet
old is
you.
the puppy?
Oh, he's about a year, right? Little change. So yeah, last year this time he was just a little bit too small. He got to go out there and hang out, but he wasn't sure what was going on.
Yeah,
So
he just like the noise and excitement.
yeah, it was fun yesterday, kind of watching him begin to figure out what we were doing, The moment where he figured out the birds were in the sky, that was fun.
Oh man, yeah,
Yeah,
What kind of dog is it?
I'm chasing them.
it was good.
Yeah,
Good.
How are you, man?
We're good. Yeah, just keeping busy, getting the kids back to school, trying to wrap up the summer and head into the fall here.
Good. Very good.
man, I tell you what, it's really a pleasure to meet you. I talked to Dan this morning, and we were kind of going over all the things that we've done together, and with our companies and everything. It's just pretty neat to see how you guys have just blossomed and how well your company's taken off. And then, I'd love for you to introduce yourself, talk about your company, and tell us about your new stuff on the budgeting side.
Be great.
Yeah, absolutely. Well, certainly appreciate you guys having me on here today. My name's Chris Maclin. I'm the CEO with Empyrean Solutions. I've been with Empyrean now for just over 5 years. Before that, I spent about 20 years for two large FinTech companies, all basically within the space of risk management and performance management. So asset liability, profitability, budgeting and planning, all those various areas. And just had a great opportunity to work with the guys from Empyrean back in 2017 when I joined. They had built an ALM platform back in the 1990s. So for those bankers that have been around for a while, kind of in the treasury risk area, they might remember it was a system called Dollar Mark, and they had a product called Monaco, which was had a number of clients. It was ultimately acquired back in the late 90s. The founders went back to work for some large regional banks down in the South. And while there, realized like, hey, a lot of these ALM systems haven't really been invested in a long time. And, having built these models before, they thought there was some technology available now that wasn't previously. So they said, let's do this over again. Came out with the model around 2011, 2012. Which they were able to sell to some former colleagues, a couple nice mid-sized banks down in the Southeast. But and they'll be the first to admit they are great developers. They're not really business developers, I guess, but more technology developers. And so we had been talking for a few years, and were able to kind of work out a situation where I could join them in 2017. And really start recruiting a team to build it up. And we've gone from 10, 15 clients 5 years ago to now we have about 130 banks and credit unions directly using the model. And we provide the outsourcing for community banks for another 300 to 400 community banks where we actually run the model for them. So we've created kind of a unique proposition where we have a great best of breed model that a medium to large size bank can use, but for those smaller community banks, they can outsource it and our team will run it for them. And then as they grow and they want to bring it in house, they can do that too. So seems like we just kind of hit the market at the right time and have had a lot of success.
Well,
I love it.
if you didn't, right now is the right time. That's for
Well,
sure.
I was gonna say, man, you kind of stole my question, right? It's like I see how good you guys are doing in the growth, right? And I mean, not to give him too much credit here, but that's where I want to be CEO of. Like, hey, look how good we're doing. We sold all these deals. It must be because of me, right? Yeah. No, I've definitely taken notice, right? And I know our team has a lot of respect for you guys. And I mean, just over the years, how it is, right? You've got a name in mind, and if you get enough years to kind of watch it, and it's like, bam, consistently good. One that he talks about, I always think this is interesting. almost anybody can go out there with enough budget and enough jazz and have a good year, but then can you deliver it?
Right.
And can you have another good year and then deliver it, right? And get the references and the clients. And so, I mean, you guys have been on a 5+ year run, I think, that looks really, really good. So hats off, man.
No, I appreciate it. You know, I think one of the funniest things when we talk internally is even to this point in and we have close to 100 employees now at Empyrean, we still don't have a head of marketing at Empyrean. And I think that's really just a testament to the way that we build this has really been word of mouth. We know that treasury, asset liability management, finance space within the banks and credit unions is pretty small, and everyone talks to each other. And so, you know, we've just relied on, you know, signing on a bank or credit union at a time, hopefully delivering a good product that they're happy with. They tell their colleagues, they go to an FHLB conference, they go to an industry conference and say, hey, we you know, it's worked well with these guys. And that's how this has really kind of blossomed into what it is today. So we don't spend a lot of money on marketing. We're not doing a ton of conferences, things like that. And we've just really tried to do this grassroots, working with the bankers that we've, you know, for a lot of us have had relationships for, you know, 20 to 25 years with and have known them for quite some time.
Well, I like to hear that.
Refreshing in the time of shiny fintech land, right? I love it. I love it. It's great.
Yeah, it's funny. You know, I think of you know, there's nothing you know, too fancy about asset liability management, right? You look at the fintech world today, and it's crypto and payments and everything else. I don't think a lot of people would purposely say, hey, let's go build an asset liability model. I mean, it's a lot of work. There's a lot of calculations. It's back of the office type stuff. It's not, you know, but again, thankfully, you look at what's happened now with interest rates over the last couple of years.
Good point.
And CEOs and CFOs are paying attention to this again, whereas rates have been so low for so long. ALM really had just become a glorified budgeting process. And now there's really an interest in, okay, well, let's take a look at our 12-month forecast. And if the Fed goes 50 basis points or 75 basis points, or we see a twist out 6 months, I mean, what are the things that could happen? So again, I think we've hit the timing right there as well.
You know, when you sit in an ALCO meeting, and it's like, yeah, I think we'll buy a little more treasuries and get rid of our CMO. You know, maybe we'll get more CMOs, get rid of some treasuries, and good meeting. See you later, right? And that goes on for what, 10, 15 years now. And all of a sudden it's like, we got some serious strategy in play now.
Oh, yeah.
So now we've got a spread issue. You've got a whole lot of things that you can deal with. You've got cost of funds increasing. You've got that delay in time and factoring. Mortgage rates, you know, spiked, then they kind of came down. They're like they're going to spike again. It's like all this crazy stuff happening. It takes an expert, and you guys have done real well. Tell me about your budgeting thing that you came out with. This is hotter than a firecracker.
Yeah, so again, just released this. We had a press release come out a couple weeks ago. We've been working with a lot of our clients for the development of this has been taking place really over the last 3 years. We've been working closely with a few of our clients over the last 18 to 24 months, kind of almost co-developing what they'd like to see in a platform like this.
Right.
And you know, it's just been super exciting. Obviously, where we kind of originated was with asset liability management, and we had a lot of success with a lot of these regional banks and large regional banks with their ALM platform. As we kind of came down market, you know, the nice thing about Empyrean is it's super easy to use, and so we started seeing more and more banks below 5 billion, below 3 billion, even below 1 billion in assets start using the AL model. But what we've seen there is when you're working with the CFO of a $1, $2, $3 billion bank, they're like, what else can you help me with? You know, it's great that we can do ALM, but I'd love to see the same cash flows and net interest margin that I'm calculating out of my AL model. Can that serve as the foundation for my budget? And then can I take that budget and start layering in the same scenario changes, assumption changes that I'd like to see, just given the current environment that we're in. So again, you look at the you know, the market of what's been sold to these CFOs over the last 15, 20 years, and everything is very siloed. Yeah. So we've come up with just one common data model. We're calling it the Empyrean Dataverse. So we can take all of that core data, bring it into one spot, and that's going to drive your ALM, your budgeting, your profitability, liquidity, deposit analysis, all the things that a CFO is really paying attention to can be done with one subset of data coming into the model, and then drive all this other analysis that they're looking to provide.
I love this stuff because you get into some of these smaller, institutions that it's like you look at them on paper and you're like, wow, you got too many branches, right? And it's like you got 24 branches and your size, that's a little out of whack. And it's like, we don't have a lot of choice, man. I mean, it's
Right.
80 miles to the next town. So we don't have any choices on our branch footprint. And
Yep.
so your standard cookie cutter kind of way of looking at things sometimes doesn't work when you get to smaller institutions. I always tell people
Especially
that,
more rural.
in the old days, there was like a little formula we worked off with. When I say the old days, I'm talking 25 years ago,
Yeah.
but it was like
Right after the Civil War.
well, yeah, it was back when $1 billion was a big deal, right? And but you'd have this situation of where there were some institutions that we called it infrastructure. These guys it's a holding company, there's infrastructure, it's rolling. And then there's others that are basically a conglomeration of branches.
Right.
And they don't really have the infrastructure. And so how you run these operations are completely different. And I think that's still true today. That's a really more of a question, I guess. Is it?
Well, I mean, we definitely, I mean, a lot of the banks are all over, it's crazy. I mean, we see $1-2 billion banks. If they have the right people, I mean, they're doing some really kind of cool analysis and can get the value out of a solution like that we offer. Whether it's for the consolidated bank, a holding company, I mean, they've got branches all over the place, depending on how the structure of the bank is. Then you might have, larger banks that have been doing things a certain way, and kind of there's a playbook that they want to follow, and they may not rely necessarily on the models as much because it's like, hey, this is just how we do things. And so, I mean, there's just so asset size doesn't always, I think, really reflect the sophistication of what a bank wants to do. And I think for the community banks, what we've seen is, ALM hasn't always been, top of mind for them, for the reasons we just talked about, where, for years rates have been low, just wasn't that exciting. But now that we've kind of tied that together with the budget, every bank CEO and CFO cares about what their budget looks like. And so to now say, hey, you can run a budget with the same sophistication and granularity of your AL model, and it's still easy to use. You can distribute that to various lines of business if you want to pull that, the various assumptions in from, different line managers, things like that. Now we're just seeing this just kind of light bulb go off for a lot of these community bank CEO and CFOs and say, wow, I love what you're doing with budgeting. And if that links into what we're doing with ALM, even better. So it's been it's really been a well-received message, and we're super excited with the feedback we're getting.
Where do you get the data feed from? Is that just like a standard core report GL side or something like that? Just whatever standard based on their core environment?
Yeah. So, I mean, obviously we see, Jack Henry, FIS, Fiserv, and probably most of our banks, frankly, that we're doing. Usually those data feeds are coming from, even if it's coming from one core system, there's usually 3 different feeds that you might get. So, there's some ETL work, some transformation logic that we'll kind of deploy to that. But again, the nice thing is once we've done that transformation and loaded into our Dataverse, it's done, so now you can leverage that data for any of the finance and risk functions within the bank that you want to run. So
Does that a complex mapping process, or you'll have that pretty well streamlined?
Just thinking, accounts and all that there. Yeah.
Yeah. And it's funny. I mean, so we've, obviously with the 130 implementations we've done, I think we've seen just about every layout that the cores can provide. The thing, frankly, from our perspective, sometimes it's a little frustrating is we really wish you could just come up with one, everyone's like, do you have one template for the core?
Yes.
We're like, we'd love that one template, but the reality is every bank sort of deploys their core slightly differently. So, we're kind of not there yet. If some of the cores can come up with those templates, it's easy enough for us to map to that and then just make it right out of the box. But usually there's some tweaking and tuning that we have to do for each individual bank or credit union that we work with.
He once drugged me into a very similar project, and let's just say I learned a lot. That was a lot of fun for me. So I know exactly what you're talking about.
It's, kudos to our implementation team. they have to live with all those data issues and all that. I mean, you guys have gone through it. I mean, I think every banker has gone through it. And I think that's one of the things, another thing that we're super proud of is just the implementation, the referenceability that we have within our client base. We know no bank wants to go through a new implementation, right? I mean, the word implementation is a 4-letter word in most of the banks that we work with. And so we really try to do everything we can to minimize the time, to minimize the effort, from the bankers as we set this up and get them up and running. Because we know that they've got their day jobs, they've got all this other stuff going on. They've all been through an implementation in the past that went way over budget and way beyond what they expected. And so again, part of that word of mouth that we really try to build up, a lot of that just comes from the success that we've had implementing our clients in a timely fashion and really trying to not have them bear too much of the burden and the effort as we go through it.
Hey, Chris, another question while we still have a little bit of time left here. So one is compliance, and then the other is just the shiny thing in the room right now is the BaaS, stuff where everybody's trying to take my bank and extend that, those services out through fintechs to enable them to serve their customers. And, there's a budgeting issue right there where Sure. I've always, been trying to pound the table. If people would look at that from a budgeting perspective, you've got just easy money to be made on something that you spend a great deal of expense on right now.
Yeah.
But there again, the compliance seems to be the elephant in the room for everybody. Yeah. And it seemed like I had heard something somewhere about you guys doing something on the compliance side.
Well, I mean, I think just in general, our roots being within asset liability management, that is for many banks, that is a compliance exercise. And, for years, we've really kind of preached the idea that it shouldn't be looked at just as a compliance exercise. I mean, every bank is kind of required to do a up 100, up 200, down 100, down 200 rate shock. The various, regulatory agencies are going to come in and it's part of your CAMELS process and everything else. And so, a lot of that, and we do see that, in a lot of smaller banks where it still kind of is a check mark, like, hey, have I done my ALM? Again, I think as we see rates change and now with this integration with budgeting and planning, I think now a CEO and CFO can feel a little bit more comfortable, like, hey, this isn't difficult for me to go in. I have my entire balance sheet in one spot. I'm forecasting it out 6, 12, 24 months, 5-year plan, whatever they want to do. And it's easy. I don't need some, propeller, aluminum foil hat analyst in the back of the office, to run something like this. I can go in and, make my rate changes. I can go and make some prepayment changes, run this stuff and really see how it impacts the bank. Then I get my reports that I can give to the regulators that they need to see, but hopefully they can then get some stuff out of it that they can actually use to help run the bank back.
Sorry, the foil hat analyst gets me, man, because we got a few of those around here, and I usually talk to them about once a week. And you talk about humbling, man. I remember once a week how stupid I actually am, right? I can't even hardly understand half of the topics.
Back in the old days, before you had stress tests, this is old days. We used to call it shock the balance sheet, right?
Yeah.
So the whole risk assessment piece of that, I've always just being a nerd.
We know you like that.
I love that stuff, man.
know.
It's like, okay, cool. And we can hedge that over here and, just a lot of neat things you can do.
Yeah.
Well, I learned my first job out of college was actually as an actuarial student. And so.
Okay, he's as bad as I am. Yeah. Easy.
But realize like maybe actuary isn't quite the path I want to go down. So I feel like it was kind of nice to kind of land in the software risk space. It seemed like that could, get into the math, not just enough, but, obviously some of the stuff that our product and development team come up with is, again, as you get more sophisticated, some of our larger clients get into stochastic analysis and term structure models, and you get to that level of understanding, that goes way over my head. So I just sort of, they start explaining to me and my eyes start glazing over and I stare blankly and just say, hey, whatever you guys say works. I'm on board, so I'm good with it. So.
I'll tell you what, man, for a lot of people out there, especially young people, when you talk about actuarial, I mean, I actually thought about that as a career too. And, so it's like, this is before banking got cool, man. Right. So now we're cool, right?
Yeah.
And I think that's something that a lot of bankers should probably hang their hat on right now is that, man, we're really in a cool business. I mean, with all of the interesting, so the math side of this, the accounting side of this, then you've also got the technology side of this thing. And then you go throw FinTech in the middle of all of it, shake that up with a regulator. And it's like, everybody's confused. Everybody's going as fast as they can go.
Yeah.
And in the old days, banking was like, yep, we've been doing this since we were trading bones and spears, you know,
Right.
and not really
Since
a
we
lot
were
of
doing it
change.
with horses. Yeah.
You know, and then all of a sudden the computers came along and it's like, well, we had a big improvement and now all of a sudden things just took off. And it's really hard today for bankers to keep up with all of the different things happening. And your companies like yours come in here and, you know, I always tell people usually the easy button is a bad thing.
Mhm.
And in your case, it's a good thing, you know, so you've got like a kind of a whole encompassing side of the banking business that you guys can run for them.
No, I mean, I think that's a great analogy with the easy button too. I mean, it's you know, you don't want to kind of oversimplify everything that's happening for some of these analytics. I mean, it's not, you know, calculating all of the cash flows for an entire bank's balance sheet. It's not that easy. And that's, you know, really a testament to our founders and the lead developers that they've, you know, having been practitioners, having worked in the treasury group, having worked for a CFO that was coming in day after day and asking like, hey, I need you to run this scenario and I need the answer for my board meeting, you know, tomorrow morning. Like, how can we turn this around quickly? How can we get the model to calculate fast enough? There's all these steps that you have to kind of consider, not just, you know, how fast does it calculate, but how easy does it, you know, how can you get the data in? How does it report out? How do you get the information to your CFO in a way that makes sense? And so, you know, there's a lot of
things that I keep hearing about with your company is just the speed.
Yes. Yeah. Again, and people, our prospects and clients will ask, well, like, how do you, you know, why is it so much faster? I mean, there must be some magical programming language that you're using. And, you know, I talk to our developers and they're like, no, it's just an understanding of like when to save data back to a database, you know, how, you know, where it's stored and how close it's stored. And I mean, there's just, and they're like, it's all of these little moments that save a second here, a second there. And then when you calculate, you know, 200,000 mortgages within your, you know, portfolio, each, you know, second, you know, half of a second, you know, fraction of a second counts, and that all adds up. And it's brought things from where a lot of times we go in and it takes a bank 20, 30 minutes to calculate a scenario. You know, they can do that now in 30 seconds with an Empyrean, and we're like, hey, you can now run 20 scenarios and, you know, still go get a cup of coffee and you're ahead of where you were before. So
we definitely get it.
I remember years ago, you know, people going out of a board meeting and calling me on the phone, and you could hear in their voice, they're trying to cover up the panic.
Right.
I've got 15 minutes on this break. I really need to know the answer to this question. It's like, I don't know if I can really help you, but I'm going to give it my best shot. Right.
Yeah.
So speed is a lot. I mean, never underestimate the power of speed and calculating data and what you can get answers to, because these answers are actually solving real problems.
Well, and as you extrapolate things out, I mean, look, we plan on the call report side. When you take even the most basic thing and multiply it by 40 quarters of time periods, right? And then you want to add, you know, one or two variables, and you get this order of magnitude concept that really quickly can bog you down.
Millions,
you know, I mean, really badly how nasty things. And then when you start calculating, well, what happens when there's changes, right? Or we're now going to recalc something different. And for the last 39 time periods, we want to calc it this way, but going forward, we want to calc a different way and smash them together, right? And so those things become really difficult. And to your point, we've certainly noticed this, right? That having the slightly more experienced and rock star developers come in, and all of a sudden things start spinning and flying and everything is wonderful.
Yeah, we're currently on probably our 900th rebuild.
Yeah.
You know, so you know,
well, so many different parts too.
It's really interesting stuff though, because you've got certain things. If you want to provide averages that are deeper than your average bear, I mean, anybody can go get call report data and throw it up there. Now you want to get into the really how to use it stuff. Well, you got RCK averages, and then you've got additional averages that you can create. Well, do you want to do it with the rolling method, or how do you want to do that? And are there 5-period denominators, and how do you want to work all this data to really make it work? That extra mile that you're talking about with your system, I get it. And I don't know that everybody else would really appreciate the lift
Yes.
that it takes to be able to produce things like this and the benefit for the banker.
Well, and I think kind of my first comment to you, Chris, is I think we know that you could go out and sell probably 50 banks and get by doing it the easy way, but you're not going to get where you guys have gotten without doing it the right way. So you definitely have my respect for it. As I have played these projects, man, I don't envy you guys. You've done something really hard and really complicated, right? And that's different than a lot of what we see in the fintech world.
And kicking ass in an area that's not that sexy to begin with,
And
right?
hard.
Yeah, pretty neat.
That's a tough one. Yeah.
Well, hey, some final thoughts on where you think you want to go in the future, and once you get into your astronaut outfit and where you're going, man.
Yeah, man.
Yeah, no. So for us, I mean, we are really laser focused on the office of the CFO, right? That's where we started with ALM. Now we've extended into the performance measurement with budgeting and profitability, and we just want to continue along that path. And so, there's things around loan analytics that we've got on the drawing board right now that we're starting to get into. Taking profitability beyond just allocations and fund transfer pricing, but getting more into dynamic pricing and things like that. So there's, again, if the CFO is responsible for it, that's where we want to be. And so that's our focus. And to date, we've been exclusively focused on North America. Again, in some of my prior organizations, we had worked extensively within Europe and Asia, and you'd be surprised at how even you might think risk management is this sort of standard practice, and should be similar across the various continents, and it's not. And so, I think for us, we love what we're doing here in the US and Canada. It's working really well for those clients. So we just want to kind of expand, within that community, and again, really focus on new products. And that's probably our bigger focus, as opposed to trying to go beyond North America into other geographic regions.
Do we have time for one more question?
You can have one more.
Can I have one more? Okay, cool. All righty. So again, kind of back to your point of, zero rate forever. A lot of things, everybody's giving credit away like it's candy right now, and had been for years.
Yeah.
There was a time where it was really hard to get access to credit. Now it's not. All right. As we roll into this new future and people start trying to, let's get away from the FICO score. Let's just start looking at what we call soft data. Let's look at alternative. Have you taken your trash out? You get credit for that. And did you pay your rent? You get credit for that. So there's a lot of new things out there. Are you seeing, or do you anticipate any additional risks levels on the ALM model based on that?
Yeah, absolutely. We've talked to a number of other organizations that are, I think, trying to push the boundary or the envelope, I guess, around how to model credit, right? So, one of the real, I'd say, reasons for our success starting a few years back was the introduction of capital planning and stress testing. So with Dodd-Frank, as the banks were approaching 10 billion in assets, one of the things that Empyrean has done from day one as it was developed was incorporate credit modeling. And so when it came time for these banks to start applying macroeconomic factors and seeing how that affects their credit, in addition to interest rate risk and asset liability, that was something that Empyrean had done from day one. So we didn't have to kind of retrofit a model to try to accept credit and things like that. So we already have a large subset of our client base using the model for their credit modeling, their stress testing, their capital planning. And so we've been approached now with this large client base that's doing that. Like, okay, are there different ways that might be a bit more effective, a bit different than maybe the way things have been traditionally done with FICO scores or things like that? And that's where the really cool, getting back to kind of maybe the cool or sexy stuff, it's AI, it's, some of that stuff where you can really start applying, looking at AI assisted type routines, when it comes to credit modeling and pricing and things like that. So that is definitely an area where we would envision ourselves being in the next few years.
That's cool. Fantastic. That's why I think all this is so cool. They're at the end of all of this, when a fellow loses his job, it's damned hard to pay the rent, right? And that's a constant. So, back to the macroeconomic side of things, when things go downhill economically, there's always defaults. There's always issues and problems that come from that. And the overextension of credit, we really haven't gone through that cycle yet to see what the repercussions of that might be.
Well, it's amazing how valuable all of us nerds become in a downturn,
Oh,
right?
man, yeah.
Right now, we're not that cool, right?
Right.
Just
Yeah,
wait.
I've been doing
Yeah.
ratings since Sheshanoff, man. So the FedFizz rating, it's really cool in a time like this, right?
Right.
Well, Dave, you mentioned earlier about, kind of this stuff being cool or getting cooler, I guess, than maybe what it traditionally. I do have to say it made me feel pretty good. Literally last night, having dinner with the family, my daughter's in the 8th grade and they were talking about what they want to be, I guess, in one of their classes, and all the kids are talking. And she's like, I actually said, I think what my dad does is really cool, working for a software company, a technology company. Now, I don't think she really understands the intricacies of asset liability management.
Listen up.
It was a start, she could have said Taylor Swift or something like that.
Right.
That's
Yeah,
great,
right.
man.
When you're looking good to the kids, that's always great.
It was good to hear, for sure. So
That sure is. I understand.
Hey,
Yeah.
enjoy the heck out of it, man. Really a good chat, and definitely on our side of the world, man. So you got some fans over here. We at least understand what you do, man. So that's super cool. And I think watching the success, I can't stress that enough. I know it's hard what you guys do, and to have as much success for as long as you have, that's a testament. So we appreciate
we appreciate, obviously we've been using you guys for years. As we continue to grow, like I said, we don't have a huge marketing budget, but FedFizz has been certainly one of the things that we've worked with over the years to make sure that we've got the proper coverage, and we're trying to get our message out and making sure we have good data to be able to do that. So you guys have been a big part of that, for us being able to make sure we're getting in front of the right folks and doing those things. And, when our sales manager mentioned that you guys were open and talked to us, like, oh, that's great. Like, we were excited, obviously you guys understand and appreciate where we're coming from. So it's always nice to share that with people that, I think can really, understand and appreciate what we do. So thank you again for having me on today.
Okay. Look forward to seeing you.
All right. Thanks, guys.
Ride the Cowboys. See you.
All right. Bye-bye.